what do you really need to be profitable? Okay, because this is one of the things that's like, if you get it wrong, then you can't really make it as a trader. If you just mess up your risk management, you can't really make it as a trader. I have a few examples. I'm also going to show you my screen from the demo accounts we created for all the examples. I'm also going to show you on my phone. I'm trying to make sure that everything I'm talking about is applicable both on your phone or your computer. Okay, this will make it easy for everyone, because I mean, you can do all of these things on both devices. Okay, you don't have to worry about should I get a laptop, should I get a computer. Of course, you can invest in one, which is, it's a good investment, but you can get everything done on your phone. Okay, now let's talk about it. We have one trader. They enter a trade. Let's say they enter a trade on a G. This is a currency pair. GDP USD, right? They enter a trade. They just enter they buy, okay? They buy GDP USD. Let's say they analyzed, let's say they have a proper strategy, and then they analyzed, and then they think, oh, it's a buy. They enter a buy, okay? Then they hold, okay? This person entered, they don't know how much they are risking, okay? They just entered a buy. They don't know how much they're risking. They don't know how much they are going to profit if this trade goes in their favor. So they just enter the buy. Okay, and then another trader enters the same trade. Okay, let's say they did the same analysis. This one also thinks that it's a buy, right? But this one, they want to risk a particular amount, and they know that if they win this trade, let me not say win. If this trade goes in their direction, they're gonna gain this amount. Okay, now the difference between these two traders is one is less informed, the other is more informed, but they both have a strategy. Okay, what I'm trying to show you here is that having a strategy is not all you need. Okay, it's not all you need, having a strategy, but you need a few more things. Okay, it's not a lot, a few more things. Let's go over it. Okay, number one, of course, you need a strategy. Okay, you have to choose a good strategy. How do you see a good strategy? You must test my spelling. You must test your strategy. Okay, I'm gonna in the next few classes we are gonna look at how you test the strategy, how you know if strategy is worth it and everything. We're gonna go through that. I test strategies almost all the time, so it's like it's much easier now for me. So you have to have a strategy, right? What else do you need? Okay, a good strategy must give you like something above 70% strike rate. Okay, but we'll get there when we test the strategies. Today we're talking about risk management. You're gonna need to manage your risk. Okay, very important. You need to manage your risk. Okay, everything that you do, in fact, whatever business you are running, whatever thing that you're doing, manage your risk. Okay, and then the third thing is your emotions. Okay, your emotions. Here we are talking about particular rules, your risk management rules on where I'm talking about risk management. And here we are talking about emotions. Okay, very, very important. Okay, emotions affect our daily lives. We can't just completely remove them, but you can master your own emotions. Okay, you can master your emotions, and I'll explain why people get emotional and on their trades. Okay, now emotions. Let's link it to following your plan, right? So you have a strategy. Check. Let me put my check boxes here. Just you have a strategy. Check. You have a plan. Your risk management plan. Check. Now emotions. Follow your plan. Check. You see, why am I attaching emotions to following your plan? Because I know you enter a trade, it goes a bit negative, you get emotional, you stop following your own plan. Okay, creating a plan is going to take you some time and a bit of a trial and error to actually come up with a plan that's going to fit your strategy. Okay, we are going to make examples on making a strategy and creating a plan for that particular strategy, and then we know from there you have to follow that particular plan. Okay, now let's talk about that's going to be a different video. That's going to be on when we talk about strategy development. Okay, so here, this is really important. You fail in one of these things, you fail in one of these things. Can you see my whiteboard? You guys are not commenting anything, so I'm assuming you can see my whiteboard. You miss one of these things, you are in trouble. Okay, some people just joined. I'm gonna just write it in full. Risk management. I think that's about that's gonna cut it. Okay, so this is really important. Now you need to actively work on it. Okay, strategy. I feel like getting a proper strategy is the easiest thing to actually do. You just need to work and see which strategy fits you, which strategy resonates with you, or any good strategy that you think, oh, okay, this is a really good strategy. It kills most of the trades. And then from there, this is where myself personally, I spent more time on, and I didn't realize for a really long time that this is where I was lacking. I just thought, okay, I have a really good strategy. I'm set. I'm going to kill the market, right? Nah, it didn't really work like that. Okay, I still had problems with emotions. I still had problems with my risk management. Now let's get to the first thing. I talk a lot. Let's introduce new terms here. Okay, let's talk about the first term. I feel like this term is more important than the other, but you'll see what I'm talking about here. Let's talk about what happens here. What happens here? I'm gonna share my own charts just now. Wait for me. But we'll be using the first. Remember the first demo account you opened on the first class? Yes, the one where you opened the trade. Okay, the trade is still running. I'm gonna use that account and show you the mistakes that I did there. This is the very much the demo account that we opened. Okay, so what happens here is I just opened the trade. Okay, and I'm just looking at the amount there. It's 200 rands. Let me just mark there. It's 200 rands there on my lower right hand side. It's 200 rands. So I'm I used to do this myself when I was a newbie. I don't blame anyone who does this. Okay, it's part of the learning curve. But you don't have to go through all of that, because now we have people, mentors who are going to help you. Okay, now you don't have to go through the whole thing that I had to go through. Okay, so I will look at the amount. I will enter a trade. Okay, I don't know how much I'm risking here. Actually, in this case, I'm risking my whole account. Okay, I don't even know how much I'm risking. I just enter and then look at the amount on my right and be like, oh, okay, I'm gonna just risk. I'm gonna wait until it reaches 500 rands. That's how I used to be when I was a beginner. Okay, I don't blame myself. I don't blame anyone who does this. It's part of the learning curve. Okay, so I will wait until it's in a certain amount, and then I'm like, yeah, now I'm closing. That's how I used to do it. Okay, and when it goes against me, okay, when I lose the trade, I wouldn't close the trade. Okay, I wouldn't close the trade. I was like, it'll go up, it'll go up, it'll go up. That's when the emotions were taking over me. Okay, that's when the emotions were taking over me, because now I feel like, you see, right now it's 200 rands in profits. We opened this trade Monday as an example on this demo account. It's 200 rands in profits. Okay, I'm a happy trader, right? But I wanted to go to 500 rands in profit. There is no logic whatsoever to what I'm doing. This is what newbies do most of the times. Okay, and then what I do is what will happen with my emotions is that I'm going to when this trade goes against me, right? When it goes below my buy order there, it goes against me. It's gonna be negative, right? I was hoping that it goes up and give me about 500 rands and then I close, right? That's very stupid. It's an example, stupid an example. Don't do this, okay? And then I close, but it goes against me. What happens there? Let's say now it's minus, let's say minus 200, okay, against me. Now what happens here? I won't close this trade. Now I feel like I should have closed before because it was 200 rands. No, but it will go up. I keep telling myself it would go up and everything like that. Okay, and then it goes lower, minus 500, minus, I blow the account. It's gone like that. Okay, no calculation whatsoever. I just enter the trade. I don't even know how much I'm risking, how much I'm going to gain, whatever. That's the mistake I used to do myself. You don't have to feel ashamed of doing the same mistakes, but you must learn. You don't have to go through the same learning curve, because now I'm telling you that this is the case. Okay, So now let's go to what you are supposed to do, right? Term number one, stop loss. Stop loss. Okay, let me write it here. Stop loss. I'm trying here. I'm trying, good people. My handwriting is bad. What is a stop loss? Okay, a stop loss is something, or right, a line, or the price value, where you are saying, you know what, if the market goes to this level, it means I was wrong. My analysis was wrong. According to your strategy, this is why I'm going to help you develop a strategy from scratch, or rather, we'll make an example so that you see how you connect the whole thing with your own strategy, so that you understand that your stop loss is not going to be the same level as someone else if you're using a different strategies, because different strategies, they have different drawdowns and everything. So we have stop loss here. Your stop loss is going to be, if you are buying, this is a buy example, all right? We want this market to go up so we make a profit, right? So your stop loss is going to be below that line. Means that when the market gets here, I know that I was wrong on this trade. It must just automatically close. Okay. You must put a stop loss, because if you do it yourself, you remember I spoke about emotions. If you say that I'm gonna close it manually because I will know that I'm wrong, that's not okay. Okay, you must pre-plan. Actually, you must plan, because I mean it's like redundant. You must plan for the trade before you enter. You must understand what you're doing. Okay, so there you are. If the market goes to this level, that means that my stop loss has been hit. I was wrong. This trade is a loss. Okay, we lost this trade. Okay. And then I'm gonna put the stop loss right there. Mistake one that was done here is there was no stop loss in place. We just placed a trade. Remember on the class where I spoke about placing your first trade. Okay, now let's do that. On your phone, it's a bit different, but you don't have to worry about it. It's very simple. Let's just do this. On your laptop, just click and drag it to where you want it to be. Okay, this is like they're saying it minus 144 pips. Okay, let's see. I don't think let's put it below here. Okay, swing low. Makes sense, right? You are putting it below the lows, right? That's your stop loss. Okay, and then let's talk about your take profit. Let me delete this line right here. Right. Okay. So now when the trade gets to this point, my trade is going to close, okay, automatically. This will just save you time either way, because you won't have to actually be closing these things manually. And then let's talk about the same term, which is take profit. Okay, I usually, let me actually write this thing down, SL, because when I give signals, I just shorten it like this, SL. Okay, your take profit is where you are collecting your money. This is good news, right? Now you are collecting your money. So profits, your take profit, your TP. Okay, this is how I shorten it when I give signals. Your TP, take profit, is where you are saying, okay, if it gets here, it means that my trade went according to plan. It hit my take profit. It's going to close in profit, and it's going to close automatically when it hits that level that you set yourself, right? Now, remember we spoke about the spread. You have to accommodate for the spread as well, because you're going to see two lines like this, and when the first one hits, it's not gonna close. It's gonna close after the next one, but it will just make sense to you if you once you start doing it. Okay. So, anyways, I wanna show you how you will open the take profit. Okay, so in the take profits, simple. You click, you drag it up. On your phone is also simple. Okay, let's see. Let's say I put it here. I'm looking according to my strategy. I'm saying, okay, maybe it will reach this this level here. I mean, the market likes to go where it used to be, or it used to whatever. I'll explain the strategies later on. Okay, so this is my take profits. Now I want you to notice something here. Okay, I'm introducing a third term now. Okay, I want you to notice the distance. Just don't even make it technical. This is where we entered, right? Our entry level. The distance between from here to here, And the distance from here to my target, can you see that there's a huge difference there? There is a really huge difference there. What is that? What am I talking about? What happens is it's something called risk to reward ratio. Okay, you want if you lose, you want to lose less, but if you gain, you want to gain a lot more. It's almost like it's more than 2 times more. You can see it is more than 2 times more. So that's your risk to reward ratio. We are always looking for setups that will give us more than we are risking. Okay, because you don't want a 50-50, you just want more than you are risking. In that way, okay, in that way, if you win this trade, say the market goes all the way to the target, it's like you have replaced you've made twice what you could have lost. So let's say your next trade was a loss, you will still be in profits because you've doubled your losses on your first trade. I mean, you've doubled your profits. How can I put this? But I hope you get it. If you don't get it, just type a thing on the chat. Okay. So that's your risk to reward ratio. I'm going to explain just now in the numbers that we usually talk about. Okay. So it must be at least 1:2. Okay. Also 1:1.5. That's also a good risk to reward ratio. Okay. You're just looking at how many times more is your take profits away. But anyway, we're gonna introduce pips just now. Pips. Okay. We're just gonna look at pips just now. But we spoke about pips. I'll do it again just so you get it. Now, from here, you click here on your charts on your laptop. I'll show you on your phone as well. You click there. Let me just highlight so that everybody gets it. You click here, right? That's your crosshair. That's what they call it. You click there. Your thingy, your chart will show you a cross like this, right? And then you click where you entered, you drag, okay? You drag up to where you saying your target is going to be. Now, if you realize there, if you look at here, I'll show you just now. Don't look now. But you will realize a number there. This number right here. You see the number I just put inside there. As you drag, this number keeps going up. You can see that, right? That's the value. That's your the distance, your pips. Okay, your pips. So how do you know how many pips is it from where you entered to where you are, where you wanna see the distance? Okay, the pips there, it's saying 471, but it's going to be 47 pips. Okay, it's going to be 47 pips. This can confuse a lot of people. Some brokers, they're gonna just give you 47. Some are going to give you for this. It can't be 471 pips. Good people, that's a short distance. It's 47 pips. Okay, it must make sense also to you as well. So that's it. So from here to there, you see 47 pips. Let's write it down, because we're going to use these numbers in just a few minutes, because I will explain something really important when you are entering a trade. 47 pips away. Okay, this is the distance. Pips are just the distance, good people. And then let's see how many pips is it to your stop loss. You click, you drag it. How many pips? Okay, 17 pips, right? This is not 170. You remove the last term, the last digit, you are left with 17 pips. Okay, this is Euro USD. Anyways, let's write it down. 17 pips. So this tells you that this is a good risk to reward ratio, because if you were to take 47 divided by 17, there is a number that you're going to get. That's your risk to reward ratio. I just want to divide it real quick. If you have the answer, you can give it to me. Okay, someone wants to join. All right. So it's going to be 47 divided by 17. It's 2.7, almost 3. Okay, it's 2.7. That is a good. Remember, I said it must be at least 1:2. This is a good risk to reward ratio because it's giving us you're gonna win 2 times, almost 3 times as much as you were gonna lose if you will have lost the trade. Okay, this gives you a lot more space to make mistakes if you're gonna make mistakes, or to losing space. Okay, it's gonna give you a lot more losing space. Remember, we spoke about the same concept of getting a lot more chances to lose when we spoke about leverage, because more leverage is giving you less losing space. What else? Less is giving you more. Okay, so you need to understand that as well. Now, how do I get someone does not cannot hear? Let me just tell them to join with. Audio. Okay. Let's get back to it. Now we spoke about risk to reward. Let me just write it down. Risk to reward. Okay, this is where we are looking at how good, and like I will say, how good is your trade, because like your setup. Okay, so you are aiming for setups that are going to be above 1. If we had let me make an example, because I feel like I'm not bringing this point across clearly. I hope you saw how we calculated pips. Okay, let's say you're entering the same trade, but your target is here, right? Is here. This is almost the same. It's like the same distance as going to your stop loss. So here you are losing the same amount as you were to gain. So that's not a good risk to reward. You must keep it above 1:1. At least 1:1.5 or 1:2. Anything above is really good. Okay. Now let's get to the next thing I wanted to talk about. I hope you saw the terms. Your take profit, this is where you take profit. Your stop loss, it was 47. Your stop loss, this is where your trade is going to close, because you were wrong. Okay, how do you know if you were wrong? Depends on the strategy you are using. You know your strategy, you know that once the market goes this way, I'm already wrong. Okay, as you can see, this was a nice I would say double bottom, like okay, let's say this is bottom 1, this is bottom 2. Just an example. It's not a strategy. It is a strategy for others, but it's not what we are going to do now. Double bottom, and then you know that if the market goes all the way past this bottom, then it's already wrong. So you will know logically, where can I put my stop loss? This is why it should be below somewhere here. Okay, we're gonna talk about stop hunts and everything. That's more advanced, but let's just build it up slowly, as we've been doing all along. Okay, now let's go to the next thing. What are people saying here? If I have $10, how many positions must I open? Okay, we are getting there. Hold your question like that. Okay, I like it. Okay, so now let's talk about. Let me show you on my phone. Before I forget, let me show you on my phone. How do you know how many pips? All right, how many pips are you losing? How many pips are you gaining? In fact, before we go there, I wanna start there before we go there. Okay, I wanna start by showing you how do you calculate these numbers. Okay, it's just really quick, and then we're gonna come back. I'll show you on my phone. Okay, remember the numbers that we had. We had your 17 pips, and then your 47 pips. Okay, don't forget those numbers. We are gonna use them just now. Now let's go and figure out how we're gonna see this. Okay, you can go online, search for a position size calculator. There are indicators as well. I used to share them. I still have them in the channel. Even on your phone or whatever, you can do the same thing. This is to avoid doing the calculation, doing the maths every time you enter the trade. Okay, there is a way to do it yourself, but it's gonna save you time just using a position size calculator. Okay, this is gonna save you time. Trust me. You don't even need to try it out. Try doing it yourself. Okay. Now account balance. Okay, you enter account balance. How much do you have in your account? I made an example here. Let me use the same one. I have 100 USD. Okay, how much by percentage do I want to risk? Okay, let's say I want to risk 5%. I want to risk 5%. How many pips away is my stop loss? Remember, we know how many pips away our stop loss is. Okay, so in that way, I'm gonna put that value in pips, 17 pips. Okay, if you remember very well, we had 17 there. Which pair are we looking at? Euro USD. You can select the pairs here. Euro USD. Okay. Calculate. What do you have here? What are we looking at here? Okay. So they are telling you first that if this trade hits your stop loss, you're gonna lose 5 USD. Okay, 5 USD. All right. And then if this trade hits your, I mean, if how many lots are you going to open? This is what you're going to do before you open the trade. Okay, how many lots are you going to open? When you click there, opening a trade, how many lots? This is how many lots? 0.0294. You can just round it off to 0. I think you can round it off to 0.03. Okay, or if your broker allow, I'm not sure if they can allow you to put so many, but it's an example. You can put this very much on your account. You don't have to worry about the mini lots, micro lots, and everything. It depends on some accounts. You find that 2.94 is it's in micro lots. Don't have to worry. Just put this because I know the brokers were using. From there, you are good. Okay, this is the website, babypips.com, a very trusted website on Forex. That's how you know. Okay, that's how you know how much your trade must be. Okay, because on the next thing I'm gonna tell you is that the plan, you need to have a plan, a risk management plan that you are going to follow. Okay, now when we speak about strategy, when you're building up the strategy, I'm going to show you exactly how you're gonna create that plan. But let's get to a few things real quick. For those of you, here's another great platform that you can use. Oh, what's also nice about it is you can also use it on your phone. Almost the same features on your phone as well. You don't have to. It's a paid platform, but there's a lot of free things that you can still use. Let me just show you this. Let's delete it. You go on your left. You plot here. Remember, this is Euro USD. You plot this. Now, this is going to show you. You are setting where you are putting your stop loss. It's more like in real time, and that's why I like trading view. This is trading view. You said this is where I open my trade. This is where I would like to put my stop loss. Okay, you see it's telling you how many pips. This is the number of pips, 12.4 pips. Okay, let's put it back to 17 point something, because our trade, I don't remember where you opened our trade, but it was up there. I think somewhere like that. And then your target, you set your target there. Okay, they tell you how many pips away is your target. Okay, now you see 42.7 pips. How much are you going to? But you need to set up some things here. Okay, let me show you something here. Click here, settings. You put in your account size. You put in that lot size. I think it was 0.029. I think if you attach your broker to this platform, it's gonna be much easier. Okay, how much are you risking? We are risking 5%. Your entry price, it's the one here. Okay, and then that's about it. Now, what it's going to do is gonna tell you how much are you going to have here after. If it hits here, this is how much you're gonna have, 95, because you're gonna lose $5. Okay, and this is how much you are going to have more. So you're gonna gain about 12 dollars. Okay, you are losing $5, you are gaining $12 if you are winning the trade. Okay, that's it. You need to know how much you are willing to lose. How much are you comfortable losing? I usually say this when we're giving signals. You need to know how much you're comfortable losing. Okay, so how much are you putting into your account? That decision you make, of course, looking at your financial situation. How much can I trade? Okay, that amount that you are putting into your trading account, you are saying that I'm comfortable if this amount goes to zero, I'll be fine. Okay, because the moment you're putting it on your broker and trading it, you're already risking that amount, right? So be comfortable from the get-go that I'm fine losing all of it, right? That way you are trying to battle your emotions, because now even if you lose, you made peace with it. Okay. And then the next thing, how much are you risking per trade now? Okay, we're looking at per trade. How much are you risking? You can adjust. You can risk. You saw we said 5%. You can risk 5% per trade. According to your account, if you have $50 on your account, which means you are risking, I don't know, 2 point something. 5% is 2.25, I believe. I'm not sure, but you must know per trade how much by percentage are you risking per trade. Okay, those are the things, and then we are going to look deeper into it when we talk about strategy development. Okay, I see no questions. Just ask questions in the chat box, because we keep these lessons as short as we can. So that ask right now, so that you can be answered whilst we're still in the session. In the meantime, I'm going to be showing you on my phone. How do I know how many pips? Because let's say you don't have a laptop or computer, you are just using your phone, right? How are you going to know the pips? So let's go. Let's dive into that part of the session. Got it. Okay. If you have a question, okay. Now I'm gonna share my cell phone screen in a minute. Share screen. Start broadcast. Okay. Okay. I think you can see my screen right now. Now let's get to it. Intelligent traders. There we are. Okay, MetaTrader. You go to your charts. Okay. You click. I'll delete this because it will confuse you. You click there on the shapes there. You click. You select the first one. This is the trend line. Okay. You select it. Then you can draw it from here. I hope you can see me drawing my trend line. Can you see it, right? From here, that's my entry point. Okay, you can set your entry point there, all the way to your target, right? Can you see this number right here? This number is telling you the same amount we're talking about. So it's telling you it's 25 pips up to this point. So that's the number right there. So you will know 25 pips to my target. If your target is there, to your stop loss, how many pips? Okay, you must adjust Nyana so you can give it space. And then your stop loss is going to be this amount. Okay, you see where we placed our stop loss on the computer. There you have it. How many pips? 15.5. Wait, should be the same number, almost 17. Okay, same thing. Okay, that's how you do it on your phone. How many pips? That's 17 pips on your phone. I'm pretty much done with the whole thing. Now let's see. Okay, I think someone typed something here. What's the question? How do you link the broker with trading view? Okay, I'll have to do a separate video for that. It's not a problem. I'll have to do a separate video for that. I hope I answered your question where you said, if I have $10, how many positions must I open? You must use any other tool. There are apps that you can download as well. Okay, and then you can do the same thing. We'll end this meeting here, good people. I hope you have a good night if you are going to sleep. Peace.